Taking a date to date, this is the marketplace. Now, the Minister for Aviation, Joseph Kofi Adda, says work will soon begin on construction of an extra parking space for aircraft at the Kotoka International Airport, as well as the construction of a new headquarters building for the Ghana Civil Aviation Authority. This, according to the Minister, is part of plans to modify and expand the airport to attract more airlines into the country. Minister for Aviation Kofi Adda says the project will commence somewhere this month.
The President is being invited to cut the sword to commence the construction of the headquarters of the Ghana Civil Aviation Authority. It's a modern office complex that has all kinds of facilities that I cannot say here. It's something that we're hoping this month the President will find some 1 or 2 hours to come and help us begin the process. But in the airside part of the airport, there's a need to have what they call the aprons. You and I call a parking area. That is quite a huge undertaking and should be able to accommodate about 14 aircrafts, I'm told. And that's on the northern part of the airport that will be going towards the Spintex or the Action Faith Chapel area. And that would accommodate more aircraft and airlines. Again, that's all part of working towards making Ghana the hub of aviation in the sub-region.
Now, the amount of money that government plans to borrow for the first 3 months of the year has witnessed some marginal increase. This is based on the fact that last year's borrowings for the same period as released by the Finance Ministry was 1 billion cedis more than the first quarter of the year. What is accounting for this? There's more in this report.
Government borrowings for the first 3 months of last year through bonds and treasury bills was 11.1 billion cedis. The bond calendar also showed that 8.9 billion cedis went into rollover of maturities, with the remaining 2.1 billion cedis supporting government's financing needs. Now, if you look at the 2019 bond calendar for first quarter, government is targeting 11.2 billion cedis. 8.7 billion cedis of this amount was to finance debts that are maturing, with 2.1 going to support government's financing needs for January to March. Now, according to the 2019 calendar, government is also planning to issue a 3-year to 15-year bond, which will be done through a book building approach. It is, however, not clear for now what might influence the slight pickup in the amount it is raising for first quarter and how that would impact on the public debt. Government last year raised about 50 billion cedis through bonds and treasury bills.
Now, First Atlantic Bank and Energy Commercial Bank are hoping to complete integrating all their systems and personnel by the middle of the year. This was after the two institutions merged to meet the new minimum capital requirement of 400 million Ghana cedis before the December 31 deadline. Odun Odumfa is Managing Director and Chief Executive of First Atlantic Bank.
We're clear in our mind that the market share that we're targeting allows us to use the people that we have together in both organizations to achieve those targets. We believe that it's a time for people perhaps to learn in different environments and different skills, and that in itself is positive. We've engaged our staff on both sides. We've explained ourselves to them. Look, for us, a bank is about the customers. Today we have more branches, we have more outlets, we're going to have more products, we need more people to sell these products and these services. We're going to need a more robust organization in terms of the processes and procedures to deal with the post-merger organization that emerges. So we're fairly confident, actually very confident, that our people will find this place a very good place to work, even post-merger. We are committed to being transparent in everything we do, for them to understand that their welfare is uppermost. Because, we're a service organization, and our main, what I would call tool, or our main driver of service is our people. And we're focused to make sure that they're happy and they work in an environment that allows them to flourish.
It's very refreshing and exciting from an accountant at the other end of this bank.
Yes, I guess so. I don't think staff have anything to worry about. For everybody that works here that contributes, you will get a fair shake. That's for sure.
Finally, for you, what will be next in terms of, again, in terms of strategy and going forward in a very, very, very competitive market, a market where regulators are being strict, that Basel 2, 3, and all those requirements that some are saying that people thought that the capital was everything. Some are saying that the real game is about to begin.
We're clearing our minds, and we've been clearing our minds for a long time, that banking is not only about profit. Banking is not just about a race to be number one. Banking is fundamentally about systems, processes, procedures, and above all, doing things right. I believe we've had several discussions over the years about how we do business here.
Let's stay within the financial space. And Chairman of the Board of Directors of the Nara Rural Bank in the Upper East Region, John Simple Atiru, is appealing to government to review downwards the corporate tax for rural banks, which currently stands at 25%, to enable them to survive. At the 28th Annual General Meeting of the Nara Rural Bank Limited held at Navrongo, management of the bank also revealed, despite the challenges in the banking sector, Nara Bank was resilient and has been able to go beyond the minimum shared capital requirement set by the Bank of Ghana for rural and community banks to meet. Our Upper East Regional Correspondent Albert Sori has more.
The Nara Rural Bank Limited prides itself as being the first rural and community bank to open in northern Ghana. The bank, which was started in the year 1981, currently has 7 branches located at Paga, Navrongo, Bolgatanga, and Sirigo. The rest of the branches are located at Pelungu, Chana, and Tongo, all in the Upper East region. This year's annual general meeting of shareholders of the Nara Rural Bank, held at Navrongo, was the 28th in the series. In his address, General Manager of the bank, Samuel Namok, said, despite the recent crisis in Ghana's banking sector, the Nara Rural Bank was resilient and has been able to go beyond the minimum shared capital requirement set by the Bank of Ghana for rural and community banks to operate.
Dear shareholders should, however, continue to increase their shareholding to enable the bank to continue to remain solid and meet any increases in the share capital holding requirement in the future of the Bank of Ghana.
He revealed some new measures being adopted by the bank to expand its operations.
In working towards the vision of the bank has instituted pro-poor products that are designed to promote growth in the communities. And notably, among these are credit with education, where customers are granted loans and educated on their business areas so as to maximize profit.
Chairman of the Board of Directors of the Nara Rural Bank, John Simple Atiru, appealed to government to review downwards the corporate tax, which currently stands at 25%.
It was previously 8%, and for no apparent reason has been raised to 25%. So we are appealing that it should be brought back to 8%.
Upper East Regional Minister Paulina Patience Sabayage charged the Nara Rural Bank to support women farmers to enable them contribute meaningfully to the economic development of the country.
Reports from the Regional Department of Agriculture indicate that 60% of subsidy recovery from farmers are made by female farmers, and I want to commend them for this effort and commitment. However, I appeal for continuous support to these women from rural and community banks in the region to enable them contribute to the local economic development.
The Upper East Regional Chapter of the Association of Rural Banks encouraged the general public to have confidence in rural banks. A representative who spoke on behalf of the association said, all rural banks in the Upper East region, including the Nara Rural Bank, have met the minimum shared capital requirement set by the Bank of Ghana for their operations. The Association of Rural Banks therefore urged members of the general public not to be afraid to do business with the rural banks. For Joy News, Albert Sorry, reporting from Navrongo.
Back here in Accra, the Association of Ghana Industries has described positive signals that the banking sector cleanup is close to ending. The crisis witnessed over the past year affected lending to businesses and lowered confidence in the banking sector. Chief Executive of the association, Seth Chuma Kwabwa, is hopeful the situation will change as the central bank winds up its exercise to sanitize the banking sector. There's more in this report.
2019 focused on building transformational SMEs. Resource persons highlighted various areas small and medium enterprises can improve upon to expand and become more competitive on the continent. Tony Otinjesi is Managing Director of Tropical Cables and Conductor Limited.
There's a digital revolution going on. There is a whole lot of data mining, data issues coming up. And for any SME now, it is very, very important that they take cognizance of these issues coming up and come out with a strategy which will take advantage of the changes and the disruptions which are happening across the world.
90% of Ghanaian businesses are said to be SMEs, but most of them face funding challenges. The Association of Ghana Industries expects an improvement in lending to businesses following the shake-up in the banking sector.
I think the concern started last year when the banking sector, had those challenges, because it actually brought down confidence level in the banking sector. And what it meant was that people were not even putting their monies in the bank and the financial institutions, and it means that it was denying the financial institutions the needed funds to also on-lend to businesses. So access to finance became an issue. For this year, the development, Bank of Ghana has made a clear position that they have finished cleaning up the banking sector, and that for me is positive. It means that we should now have confidence back in the banking industry.
Some SMEs featured earlier on the Joy Business Van, who also participated in the conference, shared their thoughts.
I was focusing on the bank, but through this program I've learned that going to the bank with a startup program, it's very difficult to access some funds. I need to go through the right channel in order to get it. And to go through those channels, I need to keep my books, like to keep my records intact, have a good management system for me to get to those people before the banks.
As a young business, often you have plans of doing cross-border business, but it takes time, and so learning how it takes time, what the process has to be like, and also getting ready to put structures in place so that the service delivery in one country isn't different from what the service delivery is in the country that you move into.
The theme for the two-day event is Transforming with the Transformation.
All right, so the Crystal Ball Conference enters day 2 today. We're trying to reach our correspondent on the grounds live for some more updates. But before we do that, let's move on to another story here. Inflation rate for the month of December 2018 marginally increased to 9.4%, missing last year's inflation target of 8.9% set by the finance minister. The transport subsector is said to be the major key driver of the current inflation rise. There's more in this report.
The year 2018 ended with a slight increase in inflation rate to 9.4% for the month of December, compared with 9.3% in November the same year. The monthly change rate in December 2018 was 1.1% against 0.7% in November. Acting Government Statistician David Combat attributed the marginal increase in inflation rates for the month of December to the hike in transport fares as well as spare parts.
Fuel prices didn't seem to have gone up, but as we explained, it's not only fuel that, constitutes what transport owners spend on. Spare parts, you hear the Aboso kind of people, talking about. And some of it is cumulative. Sometimes when prices increase, the fuel price increase marginally, they don't increase their fares. Then it increases again, they don't increase. Then at some point they come, we are increasing our fares, because cumulatively, even though there were marginal increases, it is now affecting our operations. Okay.
David Combat also broke down the analysis of inflation for some 5 regions in the country.
Consistently, Upper West has recorded the highest combined inflation rate over the period. And for this month, it also recorded the highest non-food inflation rate, with Ashanti region recording the highest food inflation rate for the month of December 2018. The questions you have been raising is why is it that Upper East is bordering Upper West, but we continue to see this trend where Upper East seems to be recording low rates and Upper West recording high rates. And we have said that these are two distinct regions. The entry points are different.
The Consumer Price Index, CPI, measures the change over time in the general price level of goods and services that households acquire for the purpose of consumption with reference to the price level in 2012.
So let's make meaning of all these figures churned out by the Statistical Service, and we go on the phone lines getting in touch with economist with Data Bank Courage Marty. Courage, good afternoon, welcome to the Marketplace.
Good afternoon, thanks for having me.
So first, can you explain why or how transport became the key driver of this current inflation rate?
Well, because when you look at the headline inflation, you can disaggregate it into two major components, the food inflation and the non-food inflation. Now, the food inflation accounts for 44% of the weight, and the non-food inflation accounts for 56% of the weight on headline inflation. Now, when you go into non-food inflation, one of the biggest or most heavily weighted item in the non-food inflation component is transport. And transport is also very key because it involves not just commuting people around, but also cutting goods and services from different segments of society or the country to the marketplace, and also can be priced into service delivery as well. So at the end of the day, transport is very, very important in the determination of non-food inflation and overall or headline inflation.
Yeah, but Courage, you realize that for some time now we've seen some relative, stability in the parity rate of the cedi against the dollar. We've also seen some improvement in crude oil prices, which is reflecting in the downstream sector. We've not seen marginal or we've not seen any increases in prices of fuel. Why is it that transport is still contributing to inflation?
Well, one thing we also need to note is that we are measuring the rate in December 2018 against the rate in December 2017. So the index, the transport index in December 2018 moved far higher compared to the transport index in December 2017. All because over the same period, we also admit that we've had some significant increases in fuel prices, and that has passed through to transport over the course of the 1 year period.
All right. Now, we also missed out on the 2018 inflation targets set by the finance minister. What does this mean?
Well, I think when we started experiencing the currency pressure, when we started experiencing an increase in oil prices on the world market, and when government started implementing the tax measures in the second half of 2018, we all knew that the government was up against it when it comes to meeting its inflation target for end 2018. And so, for me, I'm not surprised that target was marginally missed by some 40 basis points, if you like, or 50 basis points. And it shouldn't come as a surprise also because as we get into the December or the Christmas festivities, people were always going to increase their spendings, and that's also going to shock demand-side pressures to inflation.
All right, now, so what is the outlook for next month and beyond?
I think the outlook is generally positive, but there's a lot of risk that requires caution. First of all, and this means that monetary policy must remain vigilant as it has been since the second half of 2018. First of all, I mean, if you look beyond even the external risk, which monetary policy must keep watching, we also notice that this year would be the year where we are likely to record expansion in fiscal operations. And government has signaled that in the 2019 budget. If that happens, we are likely to see an increase or a push to aggregate demand. And within this situation, you would need monetary policy to remain vigilant so that they can be able to quell any excessive increase in aggregate demand that will undermine the inflation outlook. So if monetary policy is able to contain demand pressures, then we should see sustained decline towards that medium term or midpoint of 8%. But I think that the fiscal risk is one that must really, really be watched.
All right. Any effects on investments or the investor community in our country this time?
Well, basically, it's on the cost of funds, both for the private sector and even for the government itself. Because even if government comes on the market to raise funds, one of the risks that is priced into the interest or the coupon rate is the inflation risk. And so if inflation doesn't come down as fast, then, of course, the risk premium that is demanded will also not be trimmed as sharply. We must also note that we are also in a critical period, the year preceding the election year. And so you also need inflation to come down very fast because the market doesn't know how inflation will behave in an election year. And so given all this stickiness in inflation to the downside, you think that there's also the risk to the cost of funds remaining elevated on the market.
All right, many thanks for that analysis, the economist with Data Bank, Courage Marty. Now on the international business front, Samsung Electronics says it expects to post a 29% drop in quarterly operating profits as demand for smartphones and memory chips slows down.
Samsung Electronics says it expects to post a 29% drop in quarterly operating profits as demand for smartphones and memory chips slow. The firm forecast operating earnings of $9.7 billion for the first 3 months in 2018. It marks the first quarterly profit drop in 2 years as strong demand for chips had boosted earnings at the firm. Samsung also faces fierce competition from Apple and Chinese rivals. In a statement on Tuesday, the firm cited uninspiring demand and rising competition for its darkening outlook. The South Korean tech giant said in a statement that it expected earnings to remain subdued in the first quarter of 2019 due to difficult conditions for the memory business.
Still in international business, international car maker Ford has announced plans for a major shake-up of its operations in the UK and mainland Europe. It is expected to lay off thousands of jobs on the continent.
Ford is talking to unions about measures to reduce costs, including focusing on more profitable models and exiting less profitable markets. It says it will concentrate more on electric and hybrid technology. The firm will also expand its commercial vehicle business. The company says there will be a reduction of surplus labor across all its business functions. However, it has not released any figures as discussions with unions are continuing. Ford operates 2 engine factories in the UK and in Wales, as well as a joint venture with the gearbox manufacturer Getrack on Merseyside. The announcement is likely to renew concerns about the long-term future of the Bridgend plant. In particular, it is already due to lose a major contract to build engines for Jaguar Land Rover in 2020. Profits at Ford of Europe fell 82% last year, in part due to the fall in the value of the pound as a result of uncertainty over Brexit. It is understood that while this is a preoccupation for the company, it is one of the many factors affecting the business, which has been underperforming for the past years.
And on that note, we wrap up this afternoon's edition of The Marketplace. Many thanks for joining me. My name is Emmanuel Abwaji. Let's meet same time again tomorrow. Have a good afternoon.